All right, it's time for Market Structure Monday. Let's bring on our guest here, Tim Quast, founder of Market Structure Edge. Tim, welcome.
Hey, good to see you guys. That's nice. I like that.
Thank
That's
you.
yeah. Thank you, Spencer.
You like the music?
I got excited. Yeah.
What is going on here with these short squeezes? I mean, I think this is the talk right now, so I want to take it to market structure because there is people arguing with me, well, GameStop's fundamentals have totally turned around and this price is justified. And I'm trying to say there is absolutely nothing to do with the company fundamentals in a move like GameStop. Please explain to me how GameStop can go from $40 to $132 in 2 days, 2 trading days on no headlines.
More buyers than sellers.
Well, we know why we pay this guy.
That's the answer.
Well, you know, the interesting thing, what I love about market structure is that it's impervious to these bizarre occurrences that we see in the market. What I mean by that is it's the same no matter what, at least the way that we think about it. And while this is very early to jump into this, maybe I'll just share my screen and well let's look at it, right? So let me do this, and I think this will work. Yes, there I am. That's not what we want to see. So by market structure, what I mean is that the behavior of money behind price and volume as governed by the rules that articulate how the market behaves. So most people don't think about that. Dennis, you do. Joel, you guys, you do this periodically, and it's so often overlooked. And the reason I think it's so important for traders to understand this is because when you get past the headlines and the rumors and everything else, all the factors that can feed into why a stock behaves the way it does, it still comes back to the gravity of the markets, very much like it is for us human beings here on this planet. It's difficult to leave it because of gravity. And in the stock market, regulation, national market system has a big effect on how stocks behave. So I'm looking at GameStop here on my screen, just the default 30 days, and we could back this up further. So that's marketstructureedge.com, by the way. So if you want to, you can look at this yourself, traders. So what you see on your screen here, the light colored bar is market structure sentiment. It is a measure that tells us how the behaviors behind price and volume intersect with each other and affect supply and demand. And when it's above 5, stocks do better. When it's below 5, they do worse, generally speaking. And then we look at short volume. So short interest, the thing that everybody talks about, is a 1975 measure that has no bearing nor merit in a market that is electronic, and yet everybody talks about it. So we use this 2010 measure called short volume. And when it gets higher, stocks tend not to do as well. So what we want to look at is what happened to short volume in GameStop before this crazy surge. By the way, look at this. So sentiment will always tell you whether to come and go, and it doesn't matter. Even here, right now, it would say, don't leave GameStop, and I'll explain what I mean. But here's short volume. So I'm going to zoom in a little closer because I want to answer your question about what happened. Here is the day that the rumor broke that there was a short squeeze. I think it was, correct me if I'm wrong, it was either the 13th or 14th of January.
Well, it's been running for a while. It's been going.
When Citron, though, I think he means when did Citron announce like that they were?
Well, no, there was a rumor of a short squeeze.
So, yeah, that's the big pop from 20 to 40. Okay.
Exactly. And look at short volume. It actually went up. The short squeeze, to the degree that there is one, and here's a dovetail to something that's happening Friday. The expiration of a big futures contract that indexes and ETFs use heavily. There is a synthetic side to shorting called puts, and there are other factors that feed into synthetic shorting. But what I mean by synthetic shorting is there is a short that involves stock, and there is a short that involves a derivative where somebody else has the risk. So the fact is, here, there was no short squeeze. The short squeeze occurred here. The short squeeze in terms of stock occurred on the 21st of January. And that is why the stock is way up now. It hadn't even happened yet. So what the data tell us, by the way, sentiment at 10 is fine. So what you want to sell is the mean reversion. Short volume below trend is fine. So at this point, strip out everything else, and GameStop still goes up, as it appears to be doing pre-market, right? So the short squeeze did not happen till here. All trades are going to be long or short, except for a tiny percentage that are exempt from the rules that govern this. And so for a stock to have a squeeze, there has to be a decline in shorting. And it's only happening now. When this begins to mean revert, we'll know it's over. It's that simple, and it doesn't matter what's going on. So was there a squeeze? I think here's what happened. The moment that derivatives, which are a right but not an obligation to do something in the future, became uncertain, once the price is uncertain, everybody freaks out. There are people who sold those. There are banks that back them, that hedge themselves. And the moment it became unclear what the price of GameStop might be, that's what drove the stock up. And we should talk about January 29th.
Wait, hold on. So, Tim, when you say a decline in short activity, could that just mean like there are no more short shares left to short? Is that?
Well, keep in mind, this is something that traders often don't understand. There is a market-making exemption for the Citadels and the Two Sigmas and the Morgan Stanleys and the Goldman Sachses of the world, where they don't have to locate stock to short like you and I would. So the problem for Andrew Left and Citron in the market, and this is why it's so difficult to have an effective short attack anymore, is that 52 or 3% of all market volume comes from firms that don't have to locate stock. They've been granted an SEC exemption as market makers from having to locate shares. They can manufacture them. So if there's a big run on stock, this is how a stock can behave crazily. How is it possible that GameStop is up 817% prior to today, whatever it does today, just in the last 90 days? Well, because the supply and demand features of the market are distorted by fast traders like Citadel. I'm not knocking it. There are reasons for it, but it's very important if you're going to be a successful trader to understand that there are parties in the market who are responsible for more than half of the volume who don't have to behave like you. So what happens, I think what happens to bring things back to level is when the supply-demand equation, because Citadel's going to see it all. The moment you hit a limit order to sell or buy something, it goes into the pipeline, and Citadel is going to know what the buy-sell balance is. And when it reaches a point of equilibrium, Citadel will shift short. And then we will see a mean reversion for GameStop. And the only way you will see that is by watching short volume, not short interest, because you won't see, it'll be 3 weeks out of date, and it's absolutely meaningless as a measure of float or total shares outstanding.
This is great information. This is the information that you're not going to get in other places. So hit that like button, hit that subscribe button, because that was a fantastic explanation. Thank you, Tim.
Tim, can you explain how a stock gets more than 100% short interest? Is that because of these exemptions that you're talking about? Because some people are saying that the short interest is 132% or the short. So can you explain that?
Right, that's what happens, and it happens in proxy contests. Famously, Procter & Gamble believed that it had beat Trian, and it hadn't. Remember that? Well, that was a product of these manufactured shares. And our core business for the last 16 years is providing data to issuers. Well, it happens. If machines manufacture shares to meet the supply-demand equation, and you happen to take a snapshot at that point, there could be more shares available than there are outstanding. That is exactly right, Dennis.
Wow. I guess that answers that question. I've always wondered. I thought it was like naked shorting, but
I thought it was, there's some there could be some tracking error in there too, isn't there?
Sure
Like, it's
could.
not that easy to figure this out. Like I said,
Right.
and I've explained before, as a market maker, you have to mark certain stocks short sometimes when you're not even short the things. It's not about the borrow, but you still have to mark it short. I'm like, how do they like figure all that out? Because like if I've got an order out there, and if I'm long 500 shares of a stock, but I'm a market maker and I've got orders floating for thousands of shares short, I have to mark my long sales short, which is completely nuts. And I don't know how they figure that stuff out at the end of the day, that even though I marked it short, I was actually long.
Right.
So the accounting behind that, I'm not sure how that's all figured out, but that's where, I think there's some, can be some confusion and, what exactly is the short interest here too, or how much market making activity is involved, which is kind of what you were talking about.
Exactly. Here on my screen, I added BlackBerry too, but this is the amount of trading volume every day that is short. So GameStop.
How do you find that? How do you find that short volume?
So it's publicly available data. So the exchanges we consume all of it, but the exchanges will sell you that data. Of course, they will sell you data on anything. They're in the business of selling data. Right? You want data, they'll sell it to you. So they merchandise their customers. And then FINRA, the old NASD, and remember, you young traders don't know this, but the NASDAQ is the National Association of Securities Dealers Automated Quotation System, NASDAQ. So the NASD became FINRA. And FINRA provides this data publicly every day. You've got to know what you're doing with it. They provide it by platform. So we've been pulling this data since they began providing it in 2010. So we understand it fully. We apply some normalizing techniques to address, Dennis, exactly what you were talking about. The fact that if you're a market maker and you don't know, if you're executing a basket trade of hundreds of stocks, and some of it's buying and some of it's selling, there is no way on earth you can know if the supply exists to execute that trade. So you market short. That's why. And so you'd say, well, isn't that distorting the outcome? No. If they are doing that, they're telling you the supply-demand equation is out of whack. That is why we measure it. All right. So when it gets above 50%, we're reaching for straws. There isn't enough, but that's the reason why it happens, and that's where it comes from. You can go to FINRA, and you can find daily short volume. By itself, though, it can be confusing. You have to know what to do with it.
All right, a lot of good stuff here, Tim. Tim Quast is the founder of Market Structure Edge. I mentioned, of course, you can learn more by going to that platform, which I'm putting up on the screen there, marketstructureedge.com. Getting a ton of comments in the chat that the information is fantastic, and people always learn something new. This is complicated stuff. I didn't think that we would be talking about short squeezes, a month ago, but
but you came on, Tim, right? What timing?
Here we are. Tim, thanks a lot.
Good to see you. Hey, I'll miss you next week, but Joe Saluzzi is going to sit in for me.
Oh, we love Joe.
I'm going to be out sailing. You're trying to get on our good side. You're bringing in our buddy Joe. That's unbelievable.
We
love Joe.
Fantastic, isn't he? I love Joe as a human being, and he taught me a lot about what I know about market structure. So it'll be a great conversation. You guys take care. I'll see you in 2 weeks.
Thanks a lot, Tim.
All right.